As we sit here today, Saturday, May 2nd, 2026, the markets are currently closed, but the recent action in Rezolve AI has been anything but quiet. Looking back at the final trading session on Friday, May 1st, RZLV closed the day at $2.67 per share. This represents a solid climb of 3.89%, or about 10 cents, from the previous day. While that might seem like a modest gain on the surface, the intraday movement told a much more volatile story. The stock opened at $2.59, dipped as low as $2.52 during the morning lull, and then caught a massive wave of momentum late in the afternoon to hit a high of $2.68 before settling into that final closing print. After-hours trading saw a slight cooling off, with the price drifting down toward $2.62. But the volume remains the real headline here. We saw over 12.7 million shares change hands on Friday alone, which is a significant chunk of activity for a company that is currently trying to prove it belongs in the big leagues of the technology sector. The insight that most people are completely overlooking right now isn't just about the stock price. It's about the massive disconnect between the company's recent revenue reporting and its market valuation. While the broader market is busy debating whether the AI hype is cooling off, Rezolve AI quietly dropped a bombshell. They generated $60 million in revenue in the first quarter of 2026. To put that in perspective, that is more revenue in just 90 days than they reported for the entire audited year of 2025. This creates a fascinating curiosity loop because despite this explosive growth, the stock is still trading at a massive discount compared to its 52-week high of $8.45. Investors are staring at a company that is finally delivering on its promises, yet the price action suggests a deep-seated skepticism that hasn't quite evaporated yet. The common ground narrative among the retail crowd on platforms like Robinhood or Reddit is that Rezolve AI is a high-risk gamble that has burned a lot of hands since its SPAC merger. The skepticism is understandable. There is a general belief that these small-cap AI plays are just dilution treadmills, where management keeps issuing shares to stay afloat while the actual business remains a mystery. However, if we look deeper, the reality is beginning to challenge that cynical take. When you see a CEO like Daniel Wagner personally buying over 800,000 shares at an average price of $4, it signals a level of conviction that contradicts the exit scam narrative. He is putting millions of his own capital on the line at prices much higher than where we sit today. This creates a tension between the expectation of failure and the reality of a business that is finally finding its footing in the agentic commerce space. Institutional activity is where the story gets even more interesting. We aren't just seeing small-time players here. Massive firms like BlackRock and State Street have been increasing their positions, with BlackRock adding over 25% to their stake in the most recent reporting period. Even the Vanguard Group boosted their holdings by over 40%. When the smart money starts accumulating shares while the price is suppressed, it usually suggests they are looking at a 3 to 5 year horizon that the average trader checking their Fidelity mobile app every 10 minutes simply isn't seeing. There's a massive shift happening where the stock is moving from weak hands to strong hands, and that transition is often the precursor to a major trend reversal. Comment below how many shares of Rezolve AI you currently hold, or if you are waiting for it to break back above the $3 level before entering. Focusing on the immediate momentum, the recent listing of their Squad token on Revolut is a massive catalyst that many traditional equity analysts are struggling to price in. Revolut has over 70 million users globally. By integrating their decentralized data layer into a financial super app of that scale, Rezolve is essentially bridging the gap between retail commerce and blockchain-backed AI agents. This isn't just a technical update, it's a massive expansion of their distribution network. Most people looking at their individual brokerage accounts only see the ticker RZLV, but the real value is being built in the background through these massive infrastructure partnerships. They are currently working within the Microsoft AI Foundry and Google Cloud, which means their Brainpower suite is being co-sold by some of the largest sales forces on the planet. If you look at the daily swings we've seen lately, the volume is consistently staying near or above the 20-day average. This indicates that the market is actively digesting the recent $350 million revenue guidance for the full year 2026. If they actually hit that number, we're looking at nearly 10x year-over-year growth. In the world of software and technology, that kind of scaling is almost unheard of for a company at this valuation. The macroeconomic pressures of high interest rates have kept a lid on small-cap tech, but as the sector starts to rotate, companies with actual revenue growth, not just potential, are going to be the first ones to get re-rated. We're seeing this reflected in the interactive brokers trading platforms where professional short sellers are starting to cover their positions. Short interest actually dropped by nearly 18% in the last few weeks, which tells you that the people betting against this stock are starting to get nervous. Now, let's step back and look at what this company actually does, because the business model is often misunderstood. Rezolve AI isn't just another chatbot company. They focus on agentic commerce.
This means they build AI that can actually complete a transaction, search, transact, fulfill, and personalize, all within a single interface. Think about the difference between asking an AI for a recommendation and having an AI that knows your size, your style, your budget, and can actually buy the item for you through an encrypted checkout. They are targeting a $30 trillion global commerce market. Their Brain Suite acts as the underlying infrastructure for retailers who are desperate to increase their digital conversion rates. Older reports from 2024 and 2025 showed very little revenue because they were in a building phase, but the $60 million Q1 2026 figure proves the transition from vaporware to a functional business is well underway. The risk, of course, is the integration of their recent acquisitions. They recently picked up Reward Loyalty for $230 million, which added about $90 million in annual revenue to their books. The market is waiting to see if they can successfully fold these different pieces into a cohesive platform without sacrificing their path to profitability. Analysts are currently split, with some pointing to the 568% projected revenue growth as a reason to buy, while others worry about the potential for further dilution if they decide to go on another acquisition spree. This is where the tension lies. The expectation is that they might need more capital, but the reality of their growing cash flow from operations might mean they can finally stop leaning on the equity markets. Looking toward the future, the catalysts are lining up in a very specific way. If Rezolve AI can maintain this $60 million plus quarterly run rate, they will easily cruise past their $350 million annual goal. We are also watching for more updates regarding their partnership with the ONDC network in India, which could provide a massive tailwind for their mobile commerce tech in one of the fastest growing digital markets in the world. For investors using SoFi Invest or Schwab Intelligent portfolios, this is the type of stock that often looks like a sleeper hit because it's tucked away in the software infrastructure subsector rather than being a flashy consumer-facing brand like Tesla or Apple. The reality of the situation is that RZLV is currently a battleground stock. On one side, you have the historical skeptics who remember the failures of previous tech ventures led by similar management teams. On the other side, you have the data, a massive revenue beat, institutional accumulation, and partnerships with the world's largest cloud providers. The expectation was that this company would fade into obscurity after the SPAC craze ended. The reality is that they have more employees, more enterprise customers, and more revenue than ever before. When the market finally realizes that the vaporware era is over and the infrastructure era has begun, the price correction could be violent. Whether you are trading on the Robinhood app or managing a more complex portfolio through Fidelity Wealth Management, the key is to watch the $3 resistance level. Breaking that would signal a shift in technical momentum that could finally align the stock price with the fundamental growth we're seeing on the balance sheet. In summary, Rezolve AI has provided the market with a reality that far exceeds the low expectations set over the last year. The gap between those 2 points is where the opportunity lives. We've seen the short interest drop, the insider buying increase, and the revenue figures explode. The central insight remains. While the retail crowd is distracted by the next big headline, the actual infrastructure of the next generation of commerce is being built by companies like Rezolve, and they are starting to show the receipts. The contrast between the dilution treadmill narrative and the $60 million Q1 performance is the defining story of this stock. Authority in the markets comes from following the numbers, not the noise. As we head into the next few months, keep a close eye on the audited reports and the progress of the reward unit integration. If they continue to execute at this level, the expectations will finally have no choice but to catch up to the reality of a scaling global AI commerce leader. Stay sharp, watch the volume, and pay attention to where the institutional money is flowing. The story of Rezolve AI is far from over. In many ways, with this latest revenue pivot, it feels like the real work is just beginning. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.